All right, so that's the view coming in on the entire tunnel. Of course, we'll try to, get an overall view as well with regards to where, the internal numbers go. Now, seeing gains of about 2.4%, the stock is definitely zooming in trade. And largely, of course, this is on the back of the kind of top line beat that has come in. But of course, the interesting thing to watch out would be as to how the dark store edition has come in. But yeah, I think we'll take that up with the analyst himself, Sandeep Abhange, who is the lead research analyst, consumer at Midcaps LKP Securities, joining us now. Sandeep, hi, a very good afternoon to you, and thank you so much for joining us. Your first take on Eternal numbers.
Yes, thank you so much for having me. Prima facie, the numbers look great. And we have seen good amount of beats in the top line, and we will have to watch out on further commentary. But overall, prima facie on the revenue growth part and also on the EBITDA as well as on the PAT front, the company the numbers look good, and we will be watching out on commentary on usually on the dark stores, and also on the GOV and NOV growth, how it has been in this quarter. So yeah, the prima facie numbers look great.
Sandeep, I think the two reasons as to why we've seen that downtick in terms of profit versus the expectation, of course, first one being depreciation, and this could be on account of higher addition of dark stores. Of course, that commentary will be awaited and we'll know once the shareholders letter is out. The second one being employee benefit expenses have inched up quite a bit. Your quick view with regards to, how you are viewing these costs, because they have been inching up quite a bit. Depreciation I can understand, but employee benefit costs going up. Any rationale with regards to this counter?
On the employee benefit front, it's mainly the expansion of dark stores. And also on the hiring of overall new people in their team. So on the employee expenses, majorly we were expecting somewhere around a 20-30% jump, but the overall jump has been quite high. So we will get more clarity from the management in the con call on this part. But yeah, the overall PAT, the stress on the PAT was majorly on the high depreciating cost, which was mainly, like you alluded, due to the dark stores and expansion in the dark stores. And also their ad expenses have also gone up significantly. So that also has been one of the reasons.
Sandeep, even the going out business is something where losses have been incurred this quarter. I mean, it was sitting on profits of around 18 crore Q2 FY25, but this year there's a loss of 57 crores. So I believe this is where now they've started to burn cash. Is that understanding correct?
Yeah, see, going out business is still, once we have seen the Paytm acquisition, so these numbers have been added. And that has majorly played a role in terms of the overall decline in the PAT. So overall, the going out business is still in that experiment stage, and they are still experimenting newer cities and adding new cities on a quarter-on-quarter basis. So we believe that this is a very long-term business. And overall, the main focus should be on the quick commerce as well as on the food delivery. Going out, they have been experimenting a lot lately. So hopefully, things should pan out well on the long-term side on the going out business.
Okay. All right, Sandeep, thank you so much for bringing us those details. Of course, we have to wait and watch out for the commentary coming in the shareholders letter as well as in the con call. Thank you so much for taking out the time. We're also joined by Sunny Agrawal.